Let's jump right into this explainer, because we are looking at one of the most incredible transformations in the history of enterprise tech. You know the legend, right? Michael Dell starts a company out of his dorm room at the University of Texas. But listen, we are not talking about desktop PCs today. We are looking at a 2026 enterprise powerhouse that is literally rewriting the rules of the AI era. We're going to break down exactly what's happening at Dell Technologies, the staggering numbers, the hardware ecosystem, and the reality check you absolutely need to be aware of.
So how exactly did a dorm room startup triple its stock in just 6 months? Think about that. Just half a year ago, Dell's stock was sitting at levels that seem, well, almost unimaginable to us today. By August 2026, shares rocketed to an all-time high of $514. And this isn't just your standard stock market rally, no. This is the story of a company positioning itself perfectly at the dead center of the AI revolution. Let's peel back the layers of this AI boom together and see exactly how they pulled it off.
Section 1. Dell's unbelievable AI surge. To really understand this surge, we've got to look at the financial results from their fiscal first quarter of 2027. Put simply, these numbers totally stunned Wall Street. $43.84 billion. That was Dell's total reported revenue for the first quarter. That's an 88% year-over-year increase. I mean, let that sink in for a second. A hardware giant of this massive scale almost doubling its revenue in a single year. This is actually Dell's strongest revenue growth since returning to the public markets. Now, Wall Street's consensus had estimated an adjusted earnings per share of $2.94. Instead, Dell completely blew past those expectations, delivering an actual reported EPS of $4.86. They didn't just beat the street, they totally redefined the baseline. But you might be wondering, where is all this money actually coming from? The answer? 757%. That is the true engine of Dell's explosive growth right there. That percentage represents the year-over-year growth of Dell's AI-optimized server business. In that single quarter alone, their AI server revenue hit $16.1 billion. It is incredibly rare to see a multi-billion-dollar business unit grow by over 700% in 12 months. But hey, that's exactly what the AI revolution has triggered. And the crazy part? The demand isn't slowing down anytime soon. Actually, they can barely build these machines fast enough. During that same quarter, Dell booked $24.4 billion in new AI orders. So even though they were shipping products faster than ever before, their backlog of unfulfilled AI server orders just swelled to a record $51.3 billion. That backlog grew by over $8 billion in just one quarter. The enterprise appetite for this hardware is absolutely relentless. Because of this massive backlog and this just non-stop order flow, Dell had to heavily revise its outlook. They upgraded their fiscal 2027 guidance, and they're now projecting $60 billion specifically in AI server revenue, up from a previous estimate of $50 billion. And for the overall company, they are now looking at an astonishing $167 billion in total revenue. It's a level of financial shock and awe that has totally repositioned the entire company. Section 2. Inside the AI Factory. Okay, so what is actually driving all this demand? Let's transition from the finance side over to the technology ecosystem. When Dell talks about the AI factory, they aren't talking about a physical manufacturing plant pumping out servers. It's a comprehensive enterprise AI hardware and software strategy. It's heavily anchored in a massive partnership with NVIDIA, and it's designed to bring your compute power, your networking, and your storage all together into one completely optimized, unified system. Let's see how this builds out into an actual product suite. At Dell Technologies World 2026 in Las Vegas, CEO Michael Dell and NVIDIA CEO Jensen Huang actually took the stage together to unveil this ecosystem. It includes liquid-cooled PowerEdge XE servers, which, by the way, are absolutely essential because these AI chips run incredibly hot. It features the Power Rack, which is a rack-scale platform unifying the whole shebang. We also see Dell Exascale storage and brand new agentic AI capabilities, meaning AI systems that can actually take actions and execute tasks autonomously. They even introduced Dell Desk-Side Agentic AI, meaning enterprises can deploy powerful AI right at the edge of their networks. It is a truly holistic tech ecosystem. And enterprises are buying into this ecosystem at a staggering rate. The Dell AI Factory has already reached 5,000 customers. What you really want to take away from this is the sheer speed of adoption. 1,000 of those customers were added just since February 2026. Companies everywhere are realizing, hey, we need to move our critical AI workloads on premises for security and control, and Dell is right there to supply the infrastructure.
But amidst all this enterprise excitement, Dell hasn't forgotten its roots. At CES 2026, they successfully re-established their presence in the consumer market by revamping their iconic XPS laptop line. They launched the all-new XPS 14 and XPS 16, followed by the highly accessible XPS 13. I mean, it weighs just 1 kilogram and starts at $699. It's a great reminder that Dell is maintaining a very well-rounded portfolio, even while AI servers are stealing all the headlines. Section 3, the industry-wide AI boom. Broadening the lens a bit here, it's crucial to realize that Dell isn't operating in a vacuum. Just look at their peers. Supermicro, a key rival in server hardware, guided their fiscal 2027 revenue up to between $65 and $72 billion. Meanwhile, Lenovo posted a record quarter with total revenue up 43% year over year, hitting $26.9 billion. And even more telling, Lenovo's AI-related revenue specifically jumped 60% to $9.3 billion. And they have an AI server pipeline sitting around $54 billion. This data confirms that the massive demand for AI infrastructure is universal. It's a fundamental shift in how the world is building computing power. Section 4, Wall Street's verdict and the reality check.
So how is the financial world reacting to this secular shift? Well, analyst sentiment is just incredibly high. S&P Global polled 27 analysts and found a solid buy consensus with an average target of $501.17. MarketBeat tracked 32 analysts with an average near $495, and get this, a high target of $700. We're seeing major institutional upgrades across the board. Wells Fargo bumped their target to $545. Bernstein almost doubled theirs from $280 to $500. Morgan Stanley literally reversed a previous underweight call and more than doubled their target to $448. The momentum is heavily validated by the street.
But here is the reality check. You can't look at those price targets without looking at the valuation. Dell Technologies is currently trading at a premium 22 times forward price-to-earnings ratio. Compare that directly to its industry peers. Supermicro is trading at roughly 9.22 times, and HP is at 10.14. Dell is commanding a massive premium right now, which is exactly why some experts are advising just a little bit of caution. Section 5, the risks and reality check. Listen, every single high-growth story faces potential headwinds that could derail it. And as focused learners, we need to understand the full picture, not just the hype. So let's lay out the 3 major threats to Dell's current trajectory. First, valuation constraints. At 22 times forward earnings, investors are essentially pricing in AI perfection. In fact, Guru Focus estimates the stock's intrinsic value is only $202.03, meaning it might be trading 145% above its true worth. Second, insider selling. Regulatory filings show that insiders have sold $1.56 billion worth of stock over 3 months, with absolutely zero reported insider purchases. That definitely raises some eyebrows. Third, supply chain bottlenecks. Dell has already warned that constraints across memory and processors could hit later this year, which poses a very real threat to their profit margins. And all of this is building toward a very specific climax. Let's map out this timeline. We started in May 2026 with that massive Q1 record beat and the $51.3 billion backlog. That momentum carried us to August 2026, where the stock hit that incredible all-time high of $514. But a massive hurdle is fast approaching, September 3, 2026. This is the fiscal Q2 earnings report, and it is going to serve as the ultimate stress test for the company. The expectations for this upcoming report are simply massive. Dell has guided for Q2 revenue between $44 and $45 billion, which would be about 50% year-over-year growth. They're projecting roughly $15.5 billion of that to come just from AI server revenue, and the street expects an EPS of $4.90. Now, because Dell is trading at such a high premium, any miss on these numbers, whether it's top-line revenue, profit margins, or forward guidance, could trigger a sharp pullback. The pressure is absolutely on to deliver perfection. Which leaves us with this final vital question. Can exploding AI revenue actually translate into exploding profits? Or has the stock gotten entirely ahead of itself? Because expensive GPUs and complex server deployments can severely pressure margins, and that's the core tension of Dell's historic 2026 run. Will that September 3rd earnings report validate the $514 stock price, or is a major correction on the horizon? Thank you so much for joining me on this explainer. Keep an eye on those numbers and keep on learning.